Good afternoon, traders. It's Bill Baruch with Blue Line Futures Intradaily Midday Market Minute. It's Fed Day, and they hiked 25 basis points. But before I get to it, if you're watching this on YouTube, please click the link below and subscribe. Like and subscribe. If you watch from a website, there's also a link below to direct you to YouTube, and you can subscribe that way. We'd love you to follow us. We'd love you to help us build our following. All right, let's get to it here. The Fed did hike 25 basis points. This was expected. We've talked about it being a foregone conclusion all week long. And really, it's the focus being shifted to June. And those June odds are basically non-existent right now. It was an interesting, move here. A lot of people arguing, especially with the banking crisis and the forecasting of new credit tightness and the recession ahead. Everybody's calling the recession ahead. That the Fed didn't need to do this token increase. But you know what? It was a follow through showing that they are going to be tough on inflation and those Michigan inflation expectations. That came out in April at 4.6%. That was a surprise to the upside. I keep bringing that up. I'm surprised no one is really talking about it. But the Fed, I'm surprised they didn't say it today. Inflation expectations are a self-fulfilling prophecy. So I think something like that is a major reason. They're still looking at the labor market being tight. They did make a change in the language where in the March statement, and Powell pointed this out as meaningful, that the language shifted from further rate increases being appropriate to really what he emphasized being is very data dependent. Essentially, if inflation is trending lower and the job market is starting to show some loosening, they have no reason to be hiking in June. That's what he implied. The market is not responding very favorably overall from this. It started to turn down when he got some questions about rate cuts, and he said there are no reason to see rate cuts this year because they see inflation coming down much more slowly. Now, I think, again, this is really, he can't lay groundwork where they saying, oh, we see a 4% inflation number at the end of the year, or we see it below 4% or approaching 4%. They can't say that. If they do, the market's reaction function will come in and you'll see the stock market rip, you'll see commodities rip, and then you absolutely won't see that inflation number at the 4% because you'll start seeing rising inflation due to those comments. That's the market's reaction function. So he's playing this very carefully, very close to the vest. Even if they do see inflation coming down to 4%, they're not going to telegraph that. And the Cleveland Fed inflation nowcast is showing 4.2 headline inflation for May. I think we'll see inflation below 4% in the second half of this year at some point. So it's going to be interesting to see. And at least for now, it's going to be data dependent. It rolls into non-farm payroll, the job report on Friday. It rolls into CPI. I think it's next Wednesday. That's the major focus. That's what we're seeing. But let's not forget, the ECB is tomorrow. We're going to see continued volatility. The U.S. dollar, it's off the lows. The dollar index still down half a point. The euro up about half a penny. The yen is rallied fairly well off of yesterday's low, about a point and a half. Where do we find ourselves now? Yields are coming down a little bit as well. The 2 years down, back below 4%. The 10 years back to 3.4 area. So it's just, somewhat quiet. I mean, at the end of the day, we're sort of where we were in equities at the worst part of yesterday as well. And we're selling off into the close, 41.08. Stalled up there multiple times, 41.50. That was our level. We traded as high as 41.67. That might have been overnight, but or during the press conference actually. But that was our level. That was our 41.55 major 3-star resistance. That was a multiple test throughout the day. You could have sold that multiple times if you were playing from the short side. Now we are neutral bullish, cautiously bullish because we remain optimistic. And now you got some gaps down at 40.70 from last week's closings that were elevated post-close from earnings reports. And then we have some big levels below there. I highlighted on the Morning Express some rare major 4-star support levels. So go check all that out. Again, it's going to be how do we finish out through the end of the day today and where do we carry into tomorrow. But those levels on the Morning Express are going to be crucial for the NASDAQ as well as the S&P. And then we get Apple's earnings tomorrow as well. So let's not forget that's going to be a big driver. Let's touch on energy, crude oil. I thought most importantly, gasoline inventories did build when they were expecting draws. And you saw refinery utilization was down 0.6. They were expecting up 0.3. So this sort of, I haven't had a chance to dive into the numbers so much, but my assumption, the way I'm looking at this, is you're not seeing a lot of very good, you're not seeing strong demand. at the moment, but we're at the onset of this driving season. So with crude oil, it's a little off the lows, not much. It's selling off a bit here at the end of the day with the S&P. But it's an interesting spot. I think that some panic is settling in the market. However, we've seen liquidation in this space before, where $3 down days can just happen upon each other. So be careful, and that's why in our Trade It or Fade It news segment yesterday, I talked about a call spread in crude oil. Check it out. If you have any questions, contact us. That's why you can manage your risk in a market like that. But gold and silver, gold is ticking up into the end of the day right now. I'm looking at it here, 2036. Silver 25.70, and that's it. They're hanging up here. They're responding actually to U.S. Equity market weakness, and despite the dollar kind of coming up the lows a little bit, the bond market is actually working back higher here. A stock sell-off too. It's going to be an interesting overnight session. A lot of resistance obviously in gold as you get to near 2050, but moving out above yesterday's high in gold, moving out above 2028, and basically holding that through really the entire FOMC statement and press conference for the most part, is very constructive. Silver is too, 25.70, really at yesterday's highs. These are very constructive moves. Copper, though, we like copper long term, but I think it's getting dragged down here with this potential China narrative, slower growth narrative that's weighing on crude as well. I wouldn't be surprised to see copper, make a big stand here in the coming days. If it could hold these levels, be constructive off of the 380, 383 area. Platinum kind of choking up some of its early overnight gains too. So wonky markets across the board, but gold and silver, they are making a stand here end of the day. Give us a call. Our team is here to help. Don't hesitate to reach out. 312-278-0500. Remember, futures trading involves substantial risk of losses, not suitable for all investors.